So in today's video, we'll be taking a look at the Tuesday, May 5th, 2026 trading session for the CBOE SPX index. We'll be utilizing three different indicators from Day Trading GPS. First off, the SPX Daily Key Levels V3.0 indicator, and then also our add-on indicators for SPX, specifically our VWAP for SPX CBOE and our ribbon indicator, which has an optional filter for US indexes such as SPX, NDX, Dow Jones, and the Russell 2000 index. Okay, in today's particular session video, we're not going to go into all the details about how the indicator works. We would refer you to some of the previous session videos in which we go into more detail about our daily key levels trading strategy utilizing this indicator. There's going to be a link in the description of this video to uh, a previous video that we made last week, which also goes into more detail about the daily key level strategy in general, as well as our early session lotto options strategy as well. So we're not going to go over those today. In today's video, we're simply going to look at the standard play for the daily key level strategy, which is going to be the at the money option closest to the level that we're basing the trade off of. Okay, so to start off, some of you may already be familiar with this, but some of you may not. If you're on TradingView and you're trading the SPX CBOE index or the XSP, which is the mini SPX index, you may have noticed that the standard VWAP built into TradingView does not work, either the auto-anchored one or the regular VWAP. And those are these two indicators here, which you see have red exclamation points next to them. And the reason it has these red exclamation points is there is no volume data from the data provider to TradingView. So it's not a TradingView bug or a TradingView problem. It's simply because the data stream from the CBOE Global Indices feed for the SPX CBOE index, which is the official regular SPX index, as well as the official mini SPX index, which is the XSP. The data feed from CBOE does not include volume data, so consequently, normal VWAP indicators, including the ones that are built into the TradingView platform, will not work on either CBOE SPX or the XSP mini SPX from CBOE. So if we turn off our VWAP here, you'll see now the VWAP has disappeared because neither one of these VWAPs work while on this symbol or the XSP. However, our VWAP indicator that we have uses an external data source and is able to work on both the XSP mini index as well as the regular SPX CBOE index. Also, our ribbon indicator also includes an optional filter for US indices for SPX, NDX. It also works on XSP as well, even though that's not listed here, as well as the Russell 2000 index and Dow Jones index and any other US-based index that opens up at 9:30. So what this filter does is it resets the ribbon for the open because typically the indexes do not have any pre-market activity on the TradingView screen for those indexes. And so with that, sometimes with regular ribbon indicators, you can get sort of a aberration from the gap up or gap down, depending on how severe the gap up or gap down is on any particular day, which can give you a distorted view of the ribbon. So as an example, if right now the filter is on, if I turn the filter off, then you'll see we have this look, which is the look of a regular ribbon. The advantage of this ribbon indicator is that you can do a dual screen. You can have the ribbon off on one side of the screen and another chart with the ribbon on the other part of the screen. So one on the left and one on the right, and you can use those for dual confirmation. So you can either use a single confirmation using this ribbon indicator, or you can, because of the filter, you can also use it to have double confirmation if you would like to use it on a dual screen. And oftentimes the dual screen can come in very handy. In this case, we're just going to turn the filter back on, but now we're going to show you what it would look like on a dual screen. Okay, so here we have it on a dual screen. One on the left has the filter on for US indexes, one has the filter off. As you can see in both cases, we do have confirmation from the ribbon on this 9:30 a.m. BBKPL opening candle alert on the 9:30 a.m. opening candle that the daily key levels V3.0 indicator is giving us a bullish trade alert on the 9:30 a.m. opening candle. However, we're not just going to go off closes above or closes below the key levels. We're also going to use the ribbon indicator to give us confirmation. So what you're looking for with the ribbon indicator is that you are looking for the ribbon indicator to be in confluence with the close above, for a bullish close above a key level, or in the reverse, you're looking for the ribbon to be all red in the case of a close below on a bearish entry off of a key level. What would negate the signals would be if, for example, you had a close above a key level and you had a multicolored ribbon, or you had a ribbon of an opposite color. So if we have a close above a key level, but we have a red ribbon, that would negate that entry signal because we're not getting confirmation. And the same would be true on the opposite. So you're looking for the ribbon to confirm. If you'd like to use both the ribbon with the filter on and filter off on a dual confirmation, if you want even more confirmation, then you can have one side with the filter on and one side with the filter off, such as the case here. And that would be for having double confirmation. If you feel more comfortable with that, then you're looking for both ribbons with the filter on and filter off to also be confirming the same thing on either a close above or close below a main key level or a contextual level. For those of you who are not familiar with this indicator, like I said, you can watch the other video that's listed in the description of this video, which goes into more detail about the contextual levels, the YDH, the PMH, the PML, YDC, and YDL, and also the other main key levels and what each of the different main key levels means, as well as what the midpoint levels and QL levels mean. In today's session, we're not going to go over that, so I would simply refer you back to that other video to watch to get more detail. Okay, so in today's session, as we said, we have the 9:30 a.m. opening candle. We have a candle that is closing above the BBKPL level on the 9:30 a.m. opening candle. That is an opening candle alert, which you have within the V3.0 indicator, and that is down here for 9:30 a.m. opening candle close BBKPL level alert. So you would enable that. You also apply the range filter here, which is set to the default of 85%. And if this candle closes above within the acceptable range off the BBKPL in the opening candle, then you get this green bullish trade alert here. If it instead was a close below, then you would be getting a red label on top of the candle, and that would be a bearish entry alert for that, which of course we would still need to confirm with the ribbon. You also have crossed and closed above alerts for each of the main key levels as well as the contextual levels for both crossed and closed below and crossed and closed above. You also have a show last alert only, which is a decluttering filter, which will only show the last relevant alert for each enabled alert for each enabled level that you have the alert enabled for. So this is more of a decluttering thing. We don't have the other ones set for this video. We're simply trying to show the one trade for today's session, which was taken on the opening candle. You can also see all the features and inputs and how everything works with this indicator in the features and setup video, which is also a link in the description of this video if you would like more detailed information about each of the different features. We're not going to go into all the different features of this indicator, but there are many, many different features. And you can look at that video. It is split up into chapters. It is a fairly long video, but it is split up into chapters, so you can simply look for the chapters of interest and click on those chapters and look at the specific functions and features that you're interested in knowing more about. Okay, so with this daily key level strategy, there's two different strategies. There's an early session lotto option strategy, and there is the normal daily key level strategy. Like I said, we're not going to go into all those details today. You can watch the previous session video in which we go into the details in that. The link in the video. Today, we're just going to look at the standard play only. But just know that there are always, in the standard daily key level strategy, there's always going to be 3 option strikes that you can choose from on a bullish or bearish trade from any main key level. One is going to be the standard play, which we're going to look at today, and then there's going to be 2 out of the money plays as well that you can utilize if you prefer those for cost reasons over the standard play. Also, the early session lotto option strategy, which we outlined in the previous video, which the link is in the description of this video. There are 2 different option strikes for those. And you can look at all the details on the early session lotto option strategy in that previous video. So the daily key levels trading strategy, the standard play is going to be the option strike that is closest to the level that you're basing the trade on. In this case, we have the 9:30 a.m. opening candle. We have confirmation from the ribbon on the bullish trade, so it's off of the bull bear key price level 72.3701. So the closest strike to that in SPX is the 72.35 call strike. We're looking at 0 DTE options today. Know that with this indicator and with this strategy, you can use either 0 DTE or 1 DTE options for this strategy depending on your preference. Okay, so 72.3701, we have the 72.35 call option. We're buying on the close of the candle. We're on a 2-minute chart. The chart time frames you utilize with this particular strategy are between 1 minute and 5 minute, with the 2-minute chart being the most consistent performer, and that is the chart time frame that you're going to see that we utilize in all of our SPX videos on this channel, as we found it to be the most consistent performer for this particular strategy with this indicator. Okay, so on the close of the candle here, we have the ask price of $15.60. So for each option, that's going to cost $1,560. With this indicator and with this particular strategy, there are 2 different types of trades that you can take. One is a scalp-only trade. The other is a regular trade. A scalp-only trade, you're looking for a 1-level move in your favor for a 100% exit of your position, regardless of how many contracts you started out with. The way you figure that out is you take the level that you're basing the trade on, you look in the direction of the trade. We're looking up since this is a bullish trade. R1 is 1 full key level above the level that we're taking the trade on. So R1 is your scalp-only exit. The scalp-only exit was achieved here on the 10:08 a.m. candle. We have the bid price on the close of this candle, $24.60, so that is a $900 profit per option on the scalp-only trade. The other type of trade you can do with this particular daily key level strategy and indicator is called a regular day trade. So a regular trade differs from a scalp-only trade in that you are looking for one of 2 minimum threshold levels. One is either a 1.5 level move in your favor. The other is the minimum ideal 2 level move in your favor. The reason it's called a minimum ideal two-level move is that on 80% or so of the sessions that you'll see in a normal volatility, normal year for SPX, a two-level extension from the bull bear key price level in either direction or in both directions is going to be the extent of what you are going to see in approximately 80% of the sessions throughout the year. The other 20% of the sessions are either going to be compressed volatility sessions in which you're only going to see R1 through S1 ranges, or you're going to be in the 20% that are left over. You will also see ones that break out above R3 or below S3 and can go to R6 or to S6. But in 80% of the sessions you're going to with SPX, you're going to see daily ranges that are going to be two-level extensions in either or both direction from the bull bear key price level. And so today is more of a textbook example of this type of session. So we have a session which is primarily staying above the VWAP and is primarily staying above YDH and PDH and PMH, excuse me, for the entirety of the session as far as closes of candles. And we're getting a slow grinding move up. In some sessions, you will see sharp moves up, which you'll get to R2 maybe by 10:30 or 11 o'clock. Other sessions can be like this, where you'll see a slow grinding move up, such as this. Other sessions, of course, you can see more of a yo-yo effect, where we will have moves in both directions. Also, on lower volatility days, as we mentioned, in about 20% of the sessions, you're either going to see extreme volatility in the 20% of those sessions, or you're going to see very compressed volatility. So within that 20% of the sessions a year, some of them are going to be extreme volatility above R3 or below S3, while others are going to be mean reversion, lower volatility, compressed range days in which the most that you'll ever see on those days is going to be R1 through S1. And in some cases, it may not even exceed the midpoint levels between that on some extreme lower compressed volatility days. But again, in about 80% of the sessions in a normal year, a two-level extension away from the bull bear key price level in either or both directions. Okay, so here on the 1:36 p.m. candle, we have a hit of the mid R1, R2. That is a 1.5 level move from the bull bear key price level. So that is your minimum required threshold for a regular trade. And there we have on the 1:36 p.m. candle, we have a bid price on the close of $27.40. So that is approximately $1,200. It's just a hair short of $1,200 profit on that, so it's more like 1180 on this here. So the difference here at a regular trade is that on a minimum 1.5 level move in your favor, you have several different options as to what you can do with your original position, and once it reaches that level. One, you can either exit 100% of your original position, just like you did with a scalp-only trade. And that's pretty simple. It's pretty black and white. You just simply are exiting at a higher profit level than a scalp. The second option that you have is that when it hits the minimum 1.5 level move threshold in your favor, you can keep all of your original position, but at that time, adjust your stop loss to break even or break even plus an initial profit buffer of 10 to 15% on top of break even. So the stop loss on this trade is the tight stop loss is the QL level below the level we're taking the trade from. And it's the QL below because it is a bullish trade. If this was a bearish trade, the tight stop loss on a bearish trade off the bull bear KPL would be the QL above. The standard stop loss is the first midpoint level below the level you're taking the trade off of. If this instead was a bearish trade, it would be the opposite, the first midpoint above. So when you're adjusting your stop loss on a regular trade, you are not adjusting your stop loss based on a level. You are instead adjusting your stop loss to break even based on the price that you paid at the executed price that you paid for the option when you entered that trade. So in this case, $15.60, or if you added, say, 10%, that would be $1.50. That would make it approximately $17 if you wanted to add a 10% profit buffer. Now, the third option you have on a regular trade is if you were trading 3 or more options as your original position, then you can do the following. You can close out between 60 to 90%, which is the majority of your position, at the 1.5 level move in your favor, and secure the profits on closing out 60 to 90%. So as an example, if you had 3 and you closed out 2, that would be 66%. If you had 5 and closed out 3, that would be 60. If you had 5 and closed out 4, that would be 80. If you had 10 contracts and closed out 6, that would be 60. 7 would be 70, 8 would be 80, and 9 would be 90 as an example. So it depends on really how many contracts you're trading. Most people tend to trade in either 1, 3, 5, or 10, or 20. But if you're the kind of trader that, for example, you're trading 6 as an example, then you would just want to trade the majority of 6. So as an example, you would not close out 3 because that would only be 50%. You would close out 4. So the idea is that basically you are closing more than 50%. You're closing the majority somewhere between 60 to 90%. It just depends on how many contracts you originally started out with. Then on the remaining contracts, which are called your runners, then you are adjusting your stop loss to break even, which is the price you executed your original trade entry at, or break even plus an initial profit buffer of 10 to 15%. Then as price continues to move more in your favor, as it hits additional key levels in your favor, then you can either exit all of the remaining runners at the next key level move in your favor, exit some of them at the next key level move in your favor, or exit none of them and simply adjust your stop loss further, tightening it up by adding more of a profit buffer to then see if it happens to go to the next key level above. In this case, it would be above since this is a bullish trade. However, you also have to keep in mind that, as we said, on about 80% of the sessions, a 2-level move extension above or extension below the bull bear key price level is what you're going to see in 80% of the sessions. So with that in mind, when it does hit a 2-level move, even if you do have runners and did adjust your stop loss at the 1.5 level move in your favor, then at that point you want to seriously consider exiting all of the remaining contracts, or if you're not, then you would probably want to add even more of a profit buffer so that if you are going to stay in and see if it can get to mid R2, R3, or R3 or above, if we happen to get news come out or it just happens to be a technical trading event where we get a short squeeze in the case of a long bullish trend, um, you know, that way you're protecting yourself on moves above the 2-level move in your favor. A 2-level minimum ideal move is also called a minimum ideal move because you can instead alternatively use the 2-level move as your initial point instead of the 1.5 level minimum required move for your initial trigger. So that's up for each individual trader to decide for themselves from practicing and using the indicator, whether they prefer using the 1.5 level or 2 level as their threshold on regular trades. Okay, so here on the 3:10 p.m. candle, we have a hit of the R2 level. So that is now a 2-level ideal move in your favor from a trade based on the bull bear key price level. So again, you're looking up. R1 is scalp only, minimum 1.5 level threshold, mid R1, R2. And then R2 is the 2-level minimum ideal move for a bullish trade off of this level. The bid on the close of that 310 candle, $36.20, so that's a profit of $2,060 per option on that. Okay, so some of you may be wondering, how is this indicator working for people who have previously purchased it and traders that are using it on a daily basis? So what we'd like to do to close out the video is to show you some of the user reviews and feedback we've received from traders who've purchased a daily key levels indicator and are using it on a daily basis. If you are interested in purchasing this indicator, the SPX Daily Key Levels V 3.0 indicator, you can send a email to daytradinggps@gmail.com to request a discount promo code, and we'll send you a discount promo code for a substantial discount on the purchase of the indicator. And if you are also interested in the add-on indicators, the VWAP for SPX CBOE, as well as the ribbon indicator, you can also request promo codes for those as well. And now we're going to show you the user reviews and feedback from traders who have previously purchased the daily key levels indicator. We want to close out before we do that by thanking you for taking your time for watching this video today. If you did like the video, we would appreciate it if you would please hit the like button, as that helps us with the YouTube algorithm. So we'd appreciate that. If you'd like to be notified of any other new videos that we post on the channel about any of our indicators or any trading topics, please hit the subscribe button. And again, we thank you for taking your valuable time to watch this video today, and thank you for your support of this channel, and wish you prosperity in all your future trading. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.